It's about that time of day again here, isn't it? Boy, time flies when you're having fun. Welcome back, kiddos. Joseph James here, School of Trade, Sideways Markets. It's the 12th of February, 2014. Welcome to your nightly newsletter. Question: what does Janet Yellen, Monica Lewinsky, all-time highs on the equity indexes, the S&P 500, what do those all have in common? You're going to find out in just a few moments. They all have something to do with our nightly newsletter here this evening, right? We got a good collection of stuff to talk about here tonight. First things first, here's a schedule for today. We'll talk a little bit about what happened last night. We made some very profitable predictions on last night's newsletter. We'll talk about that in a couple moments. We're going to talk about what happened today. Very active day. Are you with me? I told you, Monday and Tuesday. I know. We'll get there. We'll talk about what happened today. Then we're going to prep for tomorrow. Tomorrow's a really big opportunity for us to make some more money tomorrow. And then I'm not done. Once we're done getting ready for tomorrow on the screen, I've got some charts that I want to get ready and go over with you for tomorrow. Now, don't forget, stick with me, because the charts that we talked about last night made you guys thousands of dollars in potential profit. Did you take those trades? Very good opportunities we talked about last night. So don't just quit on me here after a few minutes. You better stick around for the end of this video, because we've got some great charts to look at and some trades for you guys to be aware of going into Thursday morning. First, big moves today in the markets. Now, I don't know if you guys are paying attention, but Monday I said this, Tuesday I said this. What did I say? I said, get ready for some big moves. We had some narrow ranges. We didn't have any news on Monday and Tuesday. We heard from Janet Yellen yesterday. Today was the day. Today was the day that all those bulls came back in and said, all right, let's go. Equities now reapproaching all-time highs. Remember, everyone was scared running home when we were dropping off those all-time highs, right? The party's over. Yeah, right. These equities in the U.S. and Europe, they're going to keep going higher. They're going to keep going higher, right? It's called, there's no other game out there. Where else are you going to put your money right now? You're not going to put it in real estate. You're not going to put it in emerging markets. Okay? You're going to put it in equities. And if I have to choose, I'm going to choose U.S. equities or European equities. It's pretty simple. So, equities reapproaching all-time highs. Big move up. Today, the Russell, 124 ticks of range today, ended just over 0.5% higher at 1130. Gold made a killing on gold today. Gold, 115 ticks of range today. Up only a small amount because it went up and then came right back down. So we pretty much finished today flat on gold today. 1290 was our closing print. And of course, crude. Wednesdays. Remember, we talked about this last night. You had to be patient early this morning. Did you take my advice? I hope you didn't go forcing trades this morning. We got a couple opportunities, but we didn't get much out of it. The real party started after 10:30. And I think somebody said something about that yesterday. If you were listening and paying attention today in our trade room, you had a great opportunity there, guys, to sell that inventory report. So very active markets. Volatility was back today. This is why we trade. This is why Monday and Tuesday we sat here and we said, all right, well, we got to get through this. And then sure enough, we come back here Wednesday and bam, right out the gate, lots of volume, lots of volatility, lots of action. We had fun today. We made money today. It doesn't get much better than that, guys, right? Being a day trader is a pretty darn good gig. If you can have fun and make money at the same time, oh boy, gotta love being a trader. Now, specifically, if you guys looked at the newsletter last night, we gave you two easy money-making trade calls last night. One on gold and one on crude. Okay? All of them ended up making you money. Gold, Russell, crude. But Russell never pulled back, right? Russell just went straight up. So maybe you didn't get into the Russell going long. But please, tell me you didn't miss the gold. Tell me you didn't miss buying the 85.2 on gold and taking your profit $10 higher. 85 to 95. At $10 a tick, that's $1,000 per contract on gold. On crude, tell me you bought the buy zone. I gave you guys a big buy zone right on the chart. Tell me you bought that 99.81 and sold it 100 ticks higher, $1 higher. $10 on gold is like $1 on crude. $1,000 per contract. Guys, those are huge moves. Now, if you were in my trade room this morning, we scalped all over the place on crude and gold, and we made even more. So a very, very good day today, and I hope you guys found value in the trades that we called last night. Wait, what? You mean you didn't watch the end of the newsletter last night? You missed the good stuff, right? No, this is not the good stuff. Well, I guess it depends on who you ask, I guess. Hold on tight, though, because when we jump into some charts here, I'm going to be giving you some more levels for tomorrow. Don't miss this opportunity, guys. All right. Today, what happened in the news today? Crude oil inventories. Now, we gave you a heads up last night. What did we say last night? Rewind the tape. Go back 24 hours ago. What did we hear from last night? Tuesday evening, 4:30 p.m., API number came out. What was it? Fourth consecutive week of builds. Inventories were rising with the American Petroleum Institute report last night. Today we came in, we saw exactly the same thing. Higher inventories, lower demand. If you dug into the inventory report today, you read that there was a higher level of domestic production. That means we're pumping crude from the ground here in the U.S. And at the same time, a tick down in demand. I know, blame it on the snow, but that's the reality. A little bit less demand on crude oil because nobody's driving when it's blizzarding outside. So we saw today at 10:30, my exact words were this morning, the news at 10:30 is bearish. And it's only a matter of time before it came off those highs and tumbled all the way back down to that big round number of 100. We'll take a look at a chart in a moment, but just easy money on crude today. But you had to know what you were looking for. And you had to stay away from crude before that 10:30 news because it was a waste of time beforehand. Also, too, Treasury Budget. A little bit of a silver lining here this evening. Now, the Treasury Budget at 2 o'clock this afternoon, I'm always curious about the Treasury Budget. This time last year, 1 year ago, our Treasury deficit was $290 billion with a B. As of today, 1 year later, $144 billion. Now, I know $1 billion is quite a bit, but guys, we've slashed our deficit in half in 12 months. I gotta give credit to the politicians. Great job. Our spending is down. We're seeing an uptick in the economy, so the production in the U.S. is growing. So combining less spending, combining with a strong economy, and you got a deficit reduction. Now, don't worry too much about deficits, guys. Remember, the way that the economy works here in the U.S. is based on debt. All right? That's another topic for another time. But don't worry too much about the deficit. But very interesting to see, though, we've cut this deficit in half in 12 months. Pretty cool. How about this day in history? What happened in the past? 1997, February 12th, the Standard & Poor's, as we know as the S&P 500, the Standard & Poor's, for the first time ever, gets above $800 per contract, right? $800. Now, what's remarkable about that is that the Standard & Poor took less than 6 years to double. Now, that is pretty impressive. Imagine crude oil going from 100 to 200 in less than 6 years. Think about that. Imagine the Russell going from 1,100 to 2,000. Just think about the growth of the economy if that was to happen. That's what happened between 1995 and the year 2000. All right? Standard & Poor's, S&P gets back above, or first time above 800. Pretty remarkable that it had doubled in less than 6 years. And of course, we can't forget about this. How could I forget? February 12th, 1999. Right? Very important year for me. Graduated from high school in 1999. Boy, that put me back. This day in history, in 1999, the Senate acquits President Bill Clinton of impeachment. Right? Remember this? The old blue dress, right? I did not have... You can finish the sentence, right? I'll let you Google search on that one. Right? So Monica Lewinsky and Bill Clinton, we know, will be etched in U.S. history. Right? I can only hope that our great-grandkids will be still told this story at bedtime someday. I still find it amazing, though. And I like Bill Clinton. I really do. I'll keep my opinions out of this. But I find it amazing, though, that he still can get up in front of millions of people and not a single person goes, wasn't that guy that, yeah, right? It's amazing. It's so funny, because certain politicians, they do one thing bad and they can never get around it, right? Most people, if I was to do what Bill Clinton did, right, I would have been hung out to dry and left for dead, right, in the middle of the desert. But for some reason, right, Bill Clinton seems to be a cat with 9 lives, right? Doesn't seem to have any problem getting over that. Very interesting this day in history. What about tomorrow? We got some more news. We got some more opportunity. We've got some more Red Star news tomorrow. Are you excited? You should be. We got jobless claims tomorrow morning. We've got retail sales. Retail sales tomorrow is the big one. Why? Because now we're going to start seeing what the first of 2014 means to those retailers. Had a good holiday season. We heard about that in January. Now in February, we're going to hear about what happened in January. So retail sales tomorrow, that's the big headline news. Jobless claims, always important. And then we're going to hear again from our chairperson, Janet Yellen. Okay, so 10 o'clock tomorrow morning. Everything tomorrow is crammed into the beginning of the morning session. So I'm warning you right now. It's going to be a busy morning tomorrow morning. Now, we saw some big ranges today. We saw some awesome volatility today in the markets. And for an intraday trader, it's just heaven, right? It's exactly why I trade. It's why I suffer through days like Monday this week, watching paint dry. So Wednesday, Thursday, Friday, it was the first thing I said this week. Monday evening, my exact words were, get ready for Wednesday, Thursday, Friday. Here we are. I've got important news tomorrow. We've got some great ranges to work with. And I think we're just getting started here this evening, right? Want to grab some charts? Last night, I gave you guys some great buying opportunities on gold, crude, and Russell. If you took my advice last night, you were printing money all day today. Tomorrow, though, we got even more. It's the best part about being a trader. It never stops, right? Trades are like buses. If you miss one, just come back again. It'll be showing up again soon. So stick with me here. Let's grab some charts. Let's give you guys some info for tomorrow. And I'm excited for another big day of trading tomorrow morning. You should be too. Let's get started. All right, guys and gals, thanks for sticking around with me here this evening. It's Wednesday evening. We're getting ready for Thursday's trading session here in the U.S. I'm going to give you some great opportunities here right now, and we're going to start here with crude in just a couple seconds. Before we go into it, though, I want to remind you real quickly here, if you want to come in and join me tomorrow in my trade room, just want to give you a quick reminder here. Join my free trial. Go to SchoolOfTrade.com, join the free trial. As part of your free trial, I'm going to send you an invitation to come trade with me tomorrow afternoon. And you're going to love how simple it is and how effective this methodology is, and I'll show it to you tomorrow in real time. So don't forget to join the free trial. And also, too, if you happen not to be on the newsletter list, make sure you register for the newsletter, because the newsletter is what you're watching right now, and I'd like to send it to you specifically every evening right to your inbox. So if you want to get these newsletters delivered to your email box, right, every evening, make sure you sign up for the newsletter right on the blog over at sidewaysmarkets.com. All righty, looking good. Now, did you watch last night? Because if you watched last night, we gave you all some very significant opportunities here. Now, look what happened last night. We tagged that 1285.2, just like I said last night. I'm going to wait for gold to pull back. It pulled back, and then look where we got to. Right up to our target, 1295.4. Now, we went from 1285 to 1295. That's a $10 move, and there are 10 ticks to every dollar, right? 10 pennies to every dollar. So that means we had a 100-tick move. At $10 per tick, that is a $1,000 profit. So a $1,000 profit on gold today per contract. A very small trade account, a $2,000 trade account, could have made a 50% return today for $1,000. Okay, that's a pretty darn good trade there right out the gate on gold. And then don't get me started. How about crude? Now, crude later on fell off the highs, right? Later on in the session after 10:30, right, crude tumbles off the highs, just like I said in the introduction today. But we had a big profit to make here, buying the 99.81 like I said last night, buying at a discount. I gave you guys the exact location for it. In fact, it even gave you a second try. You got targets here at 100, 190, and 101.06. Doesn't matter where you took your profit on that, guys. You can't mess that one up. Great profit there on those two trades that were called last night on the newsletter. All right, well, unfortunately, we're only as good as our next trade, so let's get back at it now. Okay, let's not count all of our money here and waste too much time. First of all, the Texas Tea, the black gold, crude oil futures. The VIP chart today, we went marginally higher, a relatively typical range, but very interesting though, we closed right back down at the lows. Now, if you recall, I've been talking about this kind of oddball crude and gold both going higher, and one of these is going to have to tumble here, and it looks like crude might be it. It looks like crude might be getting ready for it. Here are the clues that I see. First of all, the prior week high. This prior week high has been our Achilles heel all week so far. You can see we finished the day today right back to that prior week high. So what happened was overnight, last night, we heard from China, we heard from the Eurozone, and that's what pushed crude higher. The opening bell at 9 o'clock on crude, we stumbled around a little bit until we, of course, had 10:30 news come out, and then we fell back lower. Now, the news was pretty substantial. It was pretty bearish, so I'm not surprised that this news pushed this price down. But remember, keeping that price down is a big, big deal. Most of the time, when we see news, price will go lower, but then it will come right back to where it started before that news. Not the case in this example. And when you look at the volume profile on this, you'll see here we had a double distribution day. We spent the majority of the morning up top, and then sure enough came tumbling right back down. So we had volume up at the 101.50 area and volume down here at the 150 area. So this tells me right away here, if we can't get back up tomorrow morning, we are likely now to slip and fall and possibly all the way back down, back into double-digit territory, back below the $100 a barrel. Remember, this $100 a barrel, this right here, this is a huge psychological level. More than a few times this week, we've spent more than an hour or so sitting on top of that number. It's very clear right now. The buyers of crude oil do not see value above 100. It's screaming at us. How do I know that? Because if they did, we wouldn't keep coming back and revisiting this number. We'd already be at 105 by now. Trust me, if we were bullish, we'd be at 105. We'd be approaching 110, right? We'd be going higher. But we're not. We're flirting with the highs here, but you can see it keeps tumbling back down. So bottom line, I can't predict anything for tomorrow because you know me, I'm not a predictor. I'm a reactor. So tomorrow morning, I'm suspicious of the sellers right now. Get me an opening print tomorrow morning below 100.04. Oh, there's that big round number again. We might get stuck in the mud there around 100 tomorrow. But get me below, again, below 100.04 for tomorrow. I'm going to watch closely as we test 99.60, 99.54. But once we get below these levels, guys, you got to be selling here aggressively because my final target down bottom here is going to be that low. And that low is from Friday, 97.64. There's a huge move in this. Right? We literally have $3.5 of range that we can easily see this thing collapse. And of course, I might be wrong about the bearishness. If we open above 101.38, obviously now we're bullish, and I'm looking to get long. Okay, 102 would be the next big round number above. That would be an easy target for you overhead. But I'm going to give you some targets in the anchor chart. So the most important thing you want to remember about this chart tonight is the closing print at the low. That's the big clue. We gapped up this morning. Inventories sent the price lower. We collapsed all the way back to that prior week high, which is also the big round number of 100. We're back below Monday's high. We're back below Tuesday's high. It's looking very bearish. But as you know, We have to wait and see what the opening print looks like tomorrow morning. Now, with that said, move now over to the anchor chart. And just like last night, I have a bullish trend. I have a bullish cloud. But now we're starting to see, we've now seen price get below the key moving averages, right? These key moving averages, we're now below them. We've been above them for most of the week. Now we're below them. So now they're going to be resistance. I'm still looking to buy, though, because you can see I've got 3 support levels down below me. And all 3 of these are going to be excellent spots to look for buying opportunities. So first of all, right now, I'm at a discounted price, and I'm looking for a buy up to 101.09. This was the same scenario that we saw this time yesterday, and you recall how that worked out. I'm looking for buy opportunities, and I have targets at 101.37, 101.81, and 102.29. Obviously, 101.09 is going to be the first one. As you can see here, we have quite a few different opportunities to be a buyer. I can buy the 100.25, I can buy the 99.98, and I can even buy the 99.60. Here's the deal, though. The minute we get below 99.37, we're most likely going to sell off pretty quickly to 99.12. It's only a few ticks lower. That's the line in the sand right there. All right, I'm going to have to really be patient below the 99.37, but above 99.12, because we're not going to quite be out of the woods yet. I'm definitely changing my opinion of value to bearish below 99.37. But we may get hung up there at 99.12. So if you get short there, make sure you take some profit at 99.12. I'm going to look to be aggressive, though, selling here, though, once I get below 99.37. All right, and looking for a target to the downside? A target to the downside, let's see here. I'm going to go out and guess here. We're probably going to be right around that 97.40. If you remember, we had that level on the VIP chart, 97.40. So that's where we're gunning for. 97.40, 97.11. Okay, those are going to be some easy levels for you now once we get below 99.12. But again, to get below 99.12, we got some work to do right now. Sellers have to get some work done here to get that price to go lower. Get a lot of support levels below us. So right now, I'm bullish. I'm looking for buys, and I've already given you guys my targets overhead. Let's keep moving. Now that we got the anchor chart done on crude, the black gold, we'll move over to the gold. Now, if you remember, last night I spoke about gold in the fact that we had this very wide trading range, right? This really wide range on Tuesday. And I said, you know what, guys? I would expect gold, my exact words were, to be somewhere between 1279, right, and this 1290 area. Now, I was excited to see this morning when the opening print was inside the range, because I was thinking, all right, this is going to be great. We're going to drop down in. Pretty much exactly what I was expecting. Not the case, though. Not the case. We kind of stumbled around here a little bit, jumped up to the previous high of day. This is a great example of what happens when the market opens up inside the day's range. What do I keep telling you guys every night on these calls? If we open up inside the range, expect a two-sided market, range-bound market. If you tried to buy these highs, you lost a bunch of cash, right? You tried to buy that breakout. If you tried to buy this thing as it went higher, difficult. Why? Because of where it opened. So the smart money today was waiting to sell at those highs. And as you can see, the first one went up, sell it short, back down in. Second one tried, go up, sell it short, back down in. Finally, towards the end of the morning session, towards the end of the day, we finally got price to get above the previous high of day, but it's very difficult, though, to tell what that's really telling us. Now, I can see we have pretty much a sideways two-day. We get a narrow range, and we closed at the highs. Okay, isn't the closing print at the highs, doesn't that mean we're bullish? No, it doesn't automatically mean that we're bullish. It means the buyers were in control towards the end of the session. But look at this volume profile. I want you to look at the volume profile. Where are the big spikes in volume? Of course, the first one was right here. And the second one, of course, was up top. In market profile terms, that would be considered a double distribution day, which means we spent the majority of the time in two specific locations, and that's where the volume was traded. Basically, what this tells me is that if these buyers can't keep this price propped up above the previous high of day, we're going to most likely now collapse back down to where that volume level was. And remember now, we have that same, remember this level from yesterday, 1290. So if we can't keep above that previous high of day at 94.4, we can expect price to go back to 1290, and then from there, it's an easy hop, skip, and a jump down to 1280, right? 1280, 1279 or so. So it's the volume right now is a little bit concerning here. It really could go either direction. We got some dojis up there at the highs. Now, it is remarkable that we were able to close here above that previous high of day. But I want to see what happens tomorrow. If we open tomorrow morning above 96.4, there's that big round number again I keep talking about. If we open tomorrow below 87.6, you can pretty much guarantee we're going down to that 1275.9. I've got the prior week high down here. I got the 72 even down here. And boy, if this starts getting ugly, look at the big ranges we have to make up for. Look at all the wide open space here and here. We got some big, big pockets there to get filled. So if this thing starts to tumble tomorrow, it could be a bloodbath on gold going into the end of the week. If it goes higher, I can pretty much guarantee we're going to get stuck in the mud here eventually at 1300. So the question is, do we go gangbusters through it and then collapse back down to the 1300? Or do we just try to break out and not really be able to get the car out of neutral tomorrow? So if we go above, if we go higher, that 1300 big round number is going to be on my radar, and it's going to be a big, big red flag. Those big round numbers, just think about what happened on crude. Okay, what happened on crude? Stuck around the 100. So don't be surprised tomorrow if we get up there around that 1300 and we get stuck in the mud. Moving now from the VIP chart over to the anchor chart here on gold. And here's another example of an opportunity to be a buyer right now. Now, the VIP chart looks a little bit wishy-washy. Doesn't really make it very easy on me. But this anchor chart, if you're a bear right now, you probably should change the channel because this does not look very bearish. We have higher highs, higher lows. We have all the key moving averages are below us as support. I've got buy zones here at 1290, buy zone here at 1286. And again, just like last night, I've got targets overhead here now, 98.7, 01.7. I got one more, two more there for you. We've got 98.7, 01.7, 076, and 13.9. Not to mention the high of this channel. Okay, so use those levels wisely. So what my plan is now, my plan is always pretty simple. The trend is bullish. I don't want to buy at a premium. I want to buy at a discount. So my goal is to buy at a discount, and we are right there right now. I will buy 1290.2. I'll also buy 1286.7. Now, just like I said on crude oil, if we get below the last call here, in this case on gold, it's 85.4. If we can't stay above 85.4, now the blood's in the water, now the buyers are getting hammered. I'm looking to sell short here below 84. All right, and there's not enough room there between 85 and 84 to really get much done in this area here. So just be aware, we're going to get below 85.4, get below 84 even, and then we're selling off short here, 75.9 below me. So now you've got the plan for tomorrow. And then look, you get the prior week high at 74.5. Remember, I keep telling you guys, if we happen to change direction on gold, we get a bunch of big, wide open pockets like this one right here, where we could easily drop from 84 to 76, almost $10, right? $8, it could drop in a matter of hours. So we got some wide open spaces there, both above and below. So bullish on gold, just like crude, going into tomorrow morning. Actually, going into right now, overnight. Now, moving from the commodity futures to the stock index futures. Again, we're approaching those all-time highs again on the E-minis. I know I've said this once. I've said it a million times, guys. The U.S. economy is going to be a rocket ship this year. All the stars are lining up. Whether you agree with the reasons why or not, we are one of the only games in town. Emerging markets are not where people are putting their money right now. They're investing in equities because there's really no other game in town. Now, once again, this Russell, do you recall what I said yesterday? Look back last night. And what did I talk about last night? I talked about the dangers of this prior week high and how we were able to stay around that prior week high last night. Do you remember what I said last night? I said if we open up inside the range, expect this price to have a difficult time getting away from this previous high. And that's exactly what happened. We had this huge buy up. Lots of wave patterns, lots of scalp patterns on the way up. Right at 9 o'clock, right at 9:30. So it was a very exciting opening bell on the Russell this morning. But then the easy money was selling it right back down in. That was where the easy money was. If you weren't with it this morning, if you weren't ready at 9:30, you missed that move at 9:30 on Russell. That's fine. Remember, don't get upset about it. Just be ready for the next one. So just like everything else, we get ready for the collapse, right? Comes right back down. Once we made it back down in this range, we pretty much knew we were pretty much dead asleep here now the rest of the session. So we had some great opportunities early, and then it kind of died off towards the end, back and forth here. But it was all to blame that 27.7, that prior week high. In my trade room, we actually have a rule where we don't even trade around dotted lines. Okay? In my trade room, we don't trade around dotted lines. Okay? See, solid line, right? Solid line, dotted line. Okay? So all the dotted lines we tend to avoid. Those are the opens, the closes, the previous highs, etc., etc. We had a higher two-day relationship, a typical range, and a close right in the middle. Look at the volume profile on this, and you'll see, just like we saw from gold yesterday, we have it very balanced. So all the volume right here at about 1130, right? 1130.5. So a very, very balanced market. If we open tomorrow morning above 35.7, I'm headed right to 44.5. If we open tomorrow morning below 25.3, I'm headed right down to 13.8, right down to 1104.7. So we get below 25.3. I'm looking at the previous low of day at 13.8, the previous low of the day at 04.7. Go above 35.7. I'm going right to 44.5, and then I've got another level up top here. You can see we got quite a ways to go here until we get back up to those all-time highs again. 72.5. So we got plenty of room overhead. Plenty of room overhead. I have a funny feeling though tomorrow we're probably going to get stuck at that 44.5 unless something drastic happens tomorrow morning. We get some Red Star news to work with. Moving forward, last chart here this evening with you guys is the anchor chart. Now, this is why I'm saying really this could go either way. We're looking bullish, but again, kind of just below that prior week's high. You'll notice we have a bullish trend. Okay, that's pretty obvious. We've had that for a few weeks now. So a bullish trend here in the long term on the Russell. I've got a green cloud. I'm seeing higher highs. I'm above all the key moving averages. But in the recent history, though, I'm starting to think we got a little bit of a consolidation here. Call me crazy, right? But this prior week high is probably to blame. So I'm clearly bullish, but what I need first, though, is I need price to make a new higher high. I need price to get up, make a new higher high, and I would love to buy it right at the low of that channel. That's what I need right now to get confident to buy here overnight. Now, tomorrow morning, if we end up down in these buy areas here, this is a whole different story. So I will gladly, though, look for a buying opportunity at the 26 even, at the 24.8, or even as far down as the 18.5. Now, you know the story. If I get below, in this case, 22.2, I do have a little bit of room here, so you may be able to get into a trade short below 22.2 down to 18.5. But don't force it. Don't try to force it too late in the game there. Okay? Don't try to force it too late in the game there. Once I get below 16.3, we're going to easily get short here down to 13.6. Okay? That's the prior week's close. And then it's a hop, skip, and a jump down to that big round number of 1100. So get me below 22.2. I'll sell down to 16.3. Get me below 16.3. Quick profit target at 13.6. Big profit target down here at the 1100. Big round number. You're probably going to see another one here. Well, I don't know, probably around 1106. Something like that. Right? So 1106. So keep an eye on 13.6, 1106, and 1100 on the way down. Those would be great targets for you. But again, if we're going to go lower here, I'll be very surprised if we get that low. I'm looking for buys right now. But remember, if we don't move lower before we go higher, this is really important. I cannot buy right now. If I want to buy right now, I got to get above that swing here, above 32, and then I'm off to the races buying. Okay, this is your typical price wedge. Get above that swing high, and then you'll be just fine. Okay, ideally what I want price to get down into this area here and then go up, because then I'm going to have a lot more room for profit as we go higher. Remember, I want to buy at a discount, sell at a premium. And don't forget to come out and join me tomorrow morning. So tomorrow morning, 8 a.m. Eastern Time, every day, Monday through Friday, I open up that live trade room. I will update all my charts. We'll give all the students in the trade room tomorrow morning guidance on what we saw happen overnight, and we'll be ready to rock and roll for tomorrow's Thursday's price action. Guys and gals, I want to thank you so much for coming out and joining me here this evening. Thank you for sticking around. Thanks for all your support. Thanks for registering for the newsletter. Don't forget to register for our trial, and come out and see me tomorrow morning or tomorrow afternoon, whether as a member or as a guest in our live trade room. Signing off right now from our corporate headquarters here in Los Angeles, California. My name is Joseph James. Don't forget to learn it so you can earn it. Adios, amigos. Bye-bye for now.